Look, the game theory is that you don't want to be the last one into Bitcoin.
No.
And so 2 publicly traded companies have done it. A couple of hedge fund managers have talked about it. So it's really early, but you don't want to be the last manager in.
Somebody gave me a great tip. Now, we're humans, right? Humans are pretty stupid. We anchor ourselves on certain things. So you've got a chart on the screen of which we all look at. It's our Bitcoin chart, right? So the all-time high is 20,000. So we look at that and that's what we anchor ourselves on. So the little trick is change the scale on your chart and squidge it down to the bottom. And what happens is you immediately think, oh, it's only just started its move. It's the same chart. It's behavioral anchoring. So that's what I urge everybody to do who's like thinking, oh, it's expensive. Behaviorally anchor the chart. The other thing I do is use regression lines, and you can use it on a log chart, and suddenly it gives you just a pretty simple understanding of where price moves and how it moves. And it just moves according to Metcalfe's law most of the time.
Yeah, it's so thematically, if you just do something simple like regression analysis and plot that line, you're like, oh, okay, I see where it's going. Yes, there's peaks and valleys, but like, you know, we always say, like, if you're taking a Bitcoin position, prepare to hold it for 5 or 10 years. Don't get in if that's not your time horizon. Just forget it. And the same is sort of true with gold, right? Who wants to trade around gold? That's not the trade here. But if you can hold this thing, and I think the same is true for Ether, for 5 to 10 years, then $19,000, $20,000 entry point is going to be a very fine entry point. But it is so interesting how as humans we have these anchoring and biases and things like that.
The other big one is a lot of people are like, wait, I want to own one whole Bitcoin. And they don't realize, A, that they can own a fraction of a Bitcoin, but there's like a mental block or a psychological.
Because again, the anchoring bias is
yeah.
Gold coin, banknote, right? Physical things. So
Yeah.
the anchoring bias we have is that's all you can own.
Right, that's all you can own, or my ego says I need to own a whole one. I've heard that from like young people as well. And there was a movement early on in Bitcoin to move it a decimal point, you know, the micro Bitcoin, but that never really took off. But I guess if like Gemini and Coinbase and all of us said, hey, let's make Bitcoin 2000.
Bitcoin share splits. Is that what you're talking about?
Yeah.
Or just changed our UI.
Stock split.
You know, like, so it's like you have 200 of this, or, you know, it costs $200 or something.
Yeah, it is. I mean, people they split companies for that purpose. So here's an interesting fact. There's something like 40 million plus millionaires on the planet. There's, of course, only 21 million Bitcoin. There's not enough whole Bitcoin, not that you have to buy a whole, for millionaires on the planet. So to Tyler's earlier point, like, you don't want to be the last one in. And there's going to be millions of millionaires that will never own a full Bitcoin.
Yeah, and I love that. It's empowering, right? I've always said to people, just to finish off, I've always said to people, this is the biggest legal front-running opportunity I've seen in my entire life, because we know the institutions have to come in. The more the market cap goes up, the more the institutions have to come in, because when you've got this, it's a ridiculous reflexive loop. When you've got the best performing asset class on earth, that market cap is now becoming investable by institutions, it drags in institutions, which brings the market cap up, which drags in institutions. That cycle is to play out. It hasn't even started.
And a lot of people don't understand that aspect, that for some institutions to invest in an asset class like Bitcoin, it has to have a certain size, right? Because they're only writing a check of $50, $100 million per investment. Like if Bridgewater, I think one of the largest macro hedge funds in the world, says, hey, we want to put a Bitcoin trade on, they're not going to be buying millions of dollars. They're going to be buying $1 billion plus. But if they look at the market and the economic sort of bandwidth or liquidity is only $100 million, they might, say, well, if we buy 1%, we're just going to own too much of this thing. Let's just wait for it to get more expensive counterintuitively, and then we can go in. So we're getting to that threshold where institutions can actually sort of get in based on their rule set or bylaws or whatever it is. And there's those institutions who really want to get in and wanted to get in at 100 billion, and they can't convince their
the whole space.
management.
The whole space is short upside call options. So it's a really complicated thing. The more the price rises, everybody has to buy back those call options because as the price rises, they have to get in. It's, you know, it's going to be a true experience.
We were having conversations a couple of years ago with institutions, and they're like, it's just not expensive enough for us right now. As your point. And at some point they'll see like 100,000 Bitcoin and be like, okay, we're going to plow our endowment into that. And it goes even higher. So it hasn't even started. You know, we're just seeing institutional, sophisticated people start to trickle in, but the biggest money is still on the sidelines, but it's coming. I mean, it's so inevitable. And it has been, from my point of view, since I started looking at this 8 years ago, like Bitcoin was always going to happen. It's just, we didn't have the computer science breakthroughs to make it possible, but it was always going to happen, and it is going to happen. It's happening. So